Good afternoon to all our attendees from around the globe. I'm Jennifer Saunders, Associate Director based here in Australia. I've been with corporate citizenship for the last 5 years, working with organisations across materiality, strategy and corporate community investment. The agenda for today will include a reflection on 2020 and wow, what a year it's been. We're then going to follow that up with a panel discussion, then some Q&A and then some final remarks.
Thanks, Jen, and good morning and good afternoon to everyone joining us from around the world. Delighted to be with you all here today. My name is Thomas Milburn. I'm a director at corporate citizenship based here in Singapore. And I've been working in the kind of responsible and sustainable business space for a little over a decade now. I'm excited that we have two fantastic panelists and guest speakers with us today as well, who'll be sharing later. Anita Neville from Golden Agri-Resources, one of the world's leading integrated palm oil companies, and Duncan Patterson from who's head of ESG thought leadership Asia Pacific at ISS ESG.
2020 has been a year like no other, and the events this year, from the COVID-19 pandemic, the Black Lives Matter movement, the forest fires we've seen in Australia and elsewhere, these events have really impacted and shifted the sustainability agenda for businesses the world over. So in reflecting on the year, some of the things that stand out is that the social dimension of the ESG and sustainability agenda has become more important than ever. But generally, the pace of change across the spectrum of ESG issues is accelerated as a result of events in 2020. We're also seeing the expectations from society on business to be responsible and sustainable are higher than ever. And we're living in a time of hyper-transparency, where I think the spotlight on businesses' operations and businesses' role in society is also greater than ever. So in a year like this, it's really important that we understand how these events are shaping the business priorities and what that means for the evolving ESG agenda. And naturally, the term materiality comes up. Just to do a bit of jargon busting, materiality is really about defining what matters. It's a principle used to determine what's most important, what warrants attention by the business in terms of its strategy and decision making. And a materiality assessment process is really a process of determining what's most important based on gathering evidence from a variety of sources, internally and externally, which includes, quite importantly, engaging with your stakeholders. And the results of a materiality assessment should inform strategy, and they should help a company to align business objectives and stakeholder expectations. It should also inform a company's reporting and disclosure so that it's focused on the issues that are of greatest interest to stakeholders and which affect their decision making. And so, thinking about 2020, we've got some top lessons that and tips that we've identified that are incredibly important given the unusual year that we've been through. The first is really to ensure that you align, you understand both external stakeholder interests as well as what's important to the business and what's important for driving value creation. This isn't new, and anyone who's been through a materiality exercise will most likely have done this. But what is changing, and I think what's important to note, is that materiality can be viewed through different lenses. These are three of the leading sustainability reporting standards and frameworks, and they each take a slightly different perspective on defining what's material. GRI, the Global Reporting Initiative, has been around the longest, and really it came about at a time when companies weren't good at accounting for and reporting on their externalities, their impacts on society and the environment. And so they've always taken a very broad stakeholder perspective, and they view materiality from the lens of what are the most important impacts that a business has on society and the environment. The IR, the Integrated Reporting Framework, and also the Sustainability Accounting Standards Board have both come out of the accounting profession. And so their interest has been more from a financial perspective. How are ESG and sustainability topics linked to value creation? How are they financially material? And therefore, how can we integrate those into financial disclosures and other types of reporting to give stakeholders, particularly investors, insight into the sustainability of a business? And while these approaches are different, neither of them are, or none of them rather, are wrong, and we would certainly advise all our clients to understand materiality from all of the above perspectives and use that understanding to then inform their strategies and their reporting as needed. To illustrate this, quite often what you see is companies producing a materiality matrix where on the one axis, on the y-axis perhaps, you have the external stakeholder perspective, and on the x-axis you often have the business perspective. But more and more, I think it's important that companies dive a little bit deeper into understanding the nuances of why topics are material from a financial and value creation perspective, as well as from impacts to society. So here is an example of a spider diagram that tries to do this, where you have two topics plotted based on their ability to help drive value creation. So to what extent are the topics providing a growth opportunity, helping to reduce costs, increasing productivity, or helping the business to manage risks, as well as to what extent is there stakeholder interest in that topic. And as you can see, both topics can be considered material, but for different reasons. Talent development is more material from a value creation perspective, whether it's growth, cost reduction, increased productivity, and risk management, whereas diversity and inclusion is of greater interest to stakeholders. And understanding this nuance can really help the business understand and inform not only its reporting, but its management of these topics. Secondly, our top tip is to anticipate, which means don't just focus on the here and now, but think about what is going to be important in the future. Include trend analysis and try to anticipate what are the ESG topics that are growing in importance and that we need to not just keep an eye on, but start to think about managing today so that by the time they become material in the future, we're ahead of the curve. And this brings up an important concept of dynamic materiality. And there's been a lot of talk about dynamic materiality this year. Firstly, by dynamic materiality, we simply mean that topics that are not material today, as a result of several factors, will become material or can become material over time. The other aspect of dynamic materiality is why a topic is material can change over time. And if you remember the 3 sustainability reporting standards I showed a moment ago, GRI, IR, and SASB, this diagram here sort of represents, in a way, those 3 standards and the different way they see materiality. In the largest square, the sort of grayish square, you have a view of materiality in terms of impacts on economy, environment, and people, so impacts on society in a way. And over time, a material topic may be important to society and material from that perspective. But over time, it may actually change and become material from a value creation perspective, and then as a result, also material from a financial perspective, and therefore should be included in financial accounts or other regulatory filings. And the drivers of this could be regulation, it could be growing stakeholder expectations that change the nature of why it's material, or it could be as a result of big external events like with COVID and some of the other things that have happened in 2020. So simply the nature of why a topic is material can change, and obviously how material a topic is also changes over time, and it's important that companies recognize this. One way to think about and anticipate what's growing in importance is by doing trend analysis. Here's an example from a company called True Value Labs. They're a San Francisco-based ESG analytics company, and they've been monitoring SASB categories across a variety of sources, news, social media, etc., to look at how the volume mix of different categories has changed in light of COVID. Pre-crisis, the mix of other categories represented in green here was extremely high, well above 60%, getting on to 80%. But as the pandemic unfolded, we saw a number of social topics gain a real large share of that mix. So employee health and safety, labor practices, access and affordability, product quality, safety, supply chain management, all of these have been dominating the noise and the volume of content over the last 6, 7, 8, 9 months. And it'll be interesting to see which of these tail off as we recover from the crisis and which of these topics continue to be material and continue to be significant. To help one of our clients think about this, we did a study where we looked at what are the top issues across the different phases of the crisis, from response to recovery, and then ultimately beyond the crisis to long-term resilience. And what we found was naturally the top 3 priorities differed across each of those phases. In response, a lot of the priorities were around health and safety, business continuity planning, community support, so helping those most vulnerable. But as you moved into the recovery phase, we moved away from purely health and safety to thinking about well-being overall. Another topic which wasn't on the list, but became more material to recovery, was decarbonization and building back better, or green recovery. And this is also fueled by people wanting and expecting businesses to build back better. And actually a survey by World Economic Forum found that 65% of citizens in the G20 supported a green recovery. At the same time, during the recovery period, diversity, equality, and inclusion was also a focus, particularly from a gender and a race perspective for this particular client. And I think that was related to everything we're seeing happening in the world, from Black Lives Matter to other movements out there. And then finally, from a long-term resilience perspective, this was a food and beverage related company, and food security was their number one long-term resilience issue, which included building supply chain resilience. They also identified circular economy and the need to reduce waste, reuse waste, recycle, and particularly deal with plastics, single-use plastics, being incredibly important for the long term. And then finally, to also ensure that they have the talent they need to succeed and thrive as a business, and that talent is sufficiently upskilled given the digital age we're living in. So future-ready talent was their 3rd top priority. So this is a good example about how priorities change over time, and you can think through materiality. You can see the dynamic nature of materiality. Finally, the 3rd top tip we have is engage. And that's, again, not new to anyone who's been through a materiality exercise, but given the events of the year, it is more important than ever to seek out relevant stakeholder views, both internally and externally, and make sure that you really listen to the voices of your stakeholders. But having said that, without further ado, I'd like to move into our panel discussion. So Jen, perhaps I can hand over to you to ask the first question.
So Duncan, a question for you. Perhaps you can tell us a little bit about ISS, what it does, and how the concept of materiality factors into your work, please.
Sure. So ISS stands for Institutional Shareholder Services. ISS has been around for over 40 years and is the world's largest proxy voting advisory firm. In terms specifically about ESG research, materiality is really, really important to the way we structure our core house rating. So the approach we take is to drill down as far as possible into the sectors and subsectors that make up different industries and identify which specific environmental, social and governance factors are going to be most material to the performance of the companies in the longer term. We like to think of materiality as representing a sort of a duplicate of both financial risk, but also that broader risk to stakeholders and to society. And so from our perspective, we certainly think that if you're an investor, what you want is a forward-looking indicator rather than a backward-looking indicator. And that's why ESG materiality offers really strong insights into corporate performance that our clients are quite excited to use. This is a survey that our US team conducted some months ago, around about the middle of this year, and the results have just been released. It's a global survey and is focused on the asset manager community, and it wanted to identify what are going to be some of the implications for the responsible investment space following the pandemic. Now, this is something that we've heard anecdotally for a little while now, but it was very interesting to see it come through in a quantitative way. So 62.5% of the respondents felt that the social issues are going to come up their attention chain, and that is quite an interesting finding. It's a very strong finding. Traditionally, social issues have been a bit harder to measure. They tend to be seen as softer issues, perhaps not as directly related to investment risks as environmental issues or things like climate change, which tend to be more quantifiable. And so it looks as though more and more investors are going to start doing the work and asking some of these tougher questions. So that's quite interesting. Of course, governance is always a focus in terms of stewardship. But in terms of the nature of the sorts of things that they would be looking at under that social banner, the bulk of respondents were talking about employee relations, diversity and inclusion. And I think a lot of those diversity metrics are coming out of what we've seen in the States with Black Lives Matter protests and the anxiety that the inequality of wealth distribution in the US is being linked to instability at an economic level. So that's definitely going to be something that I think asset managers and indeed asset owners longer term are going to be focusing on post-COVID. The final point down there is a very interesting one from our perspective. And we have seen that finding from a couple of different exercises we've conducted. Previously, an asset manager might have a single person who's responsible for looking at ESG issues, and indeed for smaller asset managers, it's quite often a half person or the latest analyst employed gets given that job. We're seeing the asset management community take this issue much more seriously now. They're investing real dollars. They're hiring senior people to take on responsibility for this conversation, both internally and externally. And as we can see from this result, 37.5% of respondents are now actively looking to add new resources. So yeah, we think it's quite an interesting survey, and the implications are there for the companies that these asset managers are investing in.
Yeah, no, absolutely. Thank you for sharing that, Duncan. Moving on to you, Anita. Maybe you can just quickly introduce Golden Agri-Resources, the sustainability journey you've been on, but in particular, how has the COVID pandemic impacted your business and your sustainability agenda?
Sure, thanks, and good morning, good afternoon, everyone. So Golden Agri-Resources, or GAR, is one of the world's largest vertically integrated palm oil producers. We have about 500,000 hectares of palm in production in Indonesia, which is our largest operational footprint. And like many agribusinesses, sustainability is a core component of the way that we do business. It has been an element of our business DNA as far back as '97, when we were the first Indonesian palm plantation company to implement a zero burning policy. The events of this year, which of course have been unprecedented, I think what we've seen is very much one of your earlier slides in action, Thomas. The impact of the COVID pandemic has been strange for the palm oil sector because we have been identified as a strategic economic sector in Indonesia, both as a food provider in the country, but also as a generator of economic well-being. And so our operations have continued as normal. So we've seen this kind of transition through the first stages of the pandemic from a focus, or the sort of ESG related questions being really around business continuity. The first sort of sway of questions that we got were really about business continuity and security of supply, and then a shift to what we've seen now, which is a focus more on occupational health and safety, employee well-being, community resilience, and the resilience of our third-party supply chain. And I think what that is really an acceleration of what we already saw coming down the pipeline from an ESG perspective. So if the last decade was really all about how our industry, the palm sector, tackled concerns around our environmental footprint, around deforestation and peat, it was already apparent partly as a result of the kind of materiality studies that we've been doing, that concerns around the social side of our business would be really lifting. And what we've seen is that COVID has accelerated that conversation with key stakeholders. We've also had questions about our level of commitment to our existing sustainability agenda or policies and commitments. And I think the answer from our side of things has been, actually, we have to stay on this path. This is not optional. This is now, if you like, sustainability is part of the operational cost of doing business. We cannot opt out of our existing commitments. It would affect our ability to sell in the global marketplace, but it would also affect fundamentally our ability to operate within the Indonesian context as well. And particularly things like the value we have seen coming through our investment in alternative livelihood programs and other CSR efforts in communities around our plantation estates through the pandemic. Those relationships, those embedded programs have really helped those communities ride through this period of uncertainty, particularly where they've been focused on things like food security, for example. But also we've been able to utilize those programs and community groups that we've established to do things like pivot to mask making and to contribute to the broader collective effort to tackle the pandemic across Indonesia in the areas in which we operate.
Yeah, no, thank you, Anita. I think that's really interesting to see how GAR has been responding. A quick follow-up question I have is, have some of your key stakeholder groups, and I'm thinking about investors, lenders, so some of the banks, NGOs, and maybe some of your large customers who are more active on this sustainability, have they shifted their focus at all? What's the engagement been like with them, and have they focused on any particular topic?
So as I mentioned, I think it's really been an acceleration of emphasis on the human rights and social agenda, worker well-being obviously being a key component, particularly we work in remote rural communities, and so concerns about how we were ensuring or safeguarding worker welfare in those remote locations. Ironically, and perhaps of interest to the audience, plantation estates are actually the easiest of our assets to manage because people are largely already distanced. We can control who goes in and out of estates fairly well. We have individual housing for families, so the ability to contain cases where they have occurred has been relatively easy to do. That's sort of an aside. So that concern has definitely sort of elevated. The other area has been on the question of whether we can continue our efforts to transform and trace our third-party supply chain. So we're a large-scale producer of palm oil products ourselves, but we buy about 60% of the oil that we trade from third-party suppliers and have a long-standing and significant supply chain transformation effort, including a commitment to full traceability to plantation for all of the oil we buy by the end of this year. And so there were lots of questions raised about, is that feasible given movement restrictions? And this is where technology has played an important role for us, and in some ways a surprising role. We were already using satellite technology and mapping technology, including mobile-based apps, to map our supply chain, but also to monitor our supply chain around issues like deforestation and fire prevention. The pivot has been, how do we communicate with these also remotely located suppliers when we can't physically go and conduct the kinds of training programs or site visits and audits that we were doing prior to COVID? And I've always been told that Indonesian small business owners aren't going to be interested in adopting the kind of technology we're using right now to have this webinar. And that has been disproved. Our supply chain transformation team has pivoted to online audits and also online training, utilising not just Zoom and Skype and the technologies we more commonly associate with boardrooms, but also things like Facebook Live events and YouTube Live events to be able to provide capacity building and training through this pandemic period. And we've been really surprised at the enthusiasm that our suppliers have taken to these offerings. And so our ability to continue that engagement and that process, whilst, don't get me wrong, we're itching to get back into the field and sense check some of that, has been really interesting. And we're talking about, hundreds of participants on these online programs, which has really been both surprising but also really validating in terms of the value of that effort. So to be able to communicate that and also to record those experiences for key stakeholders has been really useful.
Yeah, no, that's really interesting to see how you're coping and what the priorities how the priorities have changed during that period. One question for you, Duncan, which we sort of touched on earlier. Around the kind of various standards and the way we can look at materiality either from a financial perspective or from the company's impact on society. And, in your role at ISS ESG and the work you do for your clients, materiality is quite important. How do you look at the concept of double materiality, and how do you reconcile, what's happening with in the sustainability reporting standards space?
Yeah, no, that's an interesting question. I mean, I would characterize the topic of double materiality sort of in terms of materiality both from the ESG risk, materiality, the potential future impacts on the business, but also the impacts that the business has on the society around it, right? So looking at that issue of materiality from two different perspectives. I've been doing some stakeholder engagement work actually for a large asset owner client, and it involved calling up different responsible investment people from around the world and asking them their opinions on a bunch of different topics. And there's a really interesting and a strong demarcation between the European and the US approach to measuring materiality, right? So the responsible investment market, and this is in the context of responsible investment, the responsible investment market in the EU is quite mature. It's been around for a very long time. The participants are quite sophisticated. When they look at the issue of materiality, they want to look more deeply than just whether or not this is going to make an impact on the company's financial returns in the next quarter or the next year. They're interested more in the impacts that an ESG factor is having on the company's social license to operate. So is the company's sustainability profile lending itself to trading in the longer term? And that involves relationship with stakeholders, policymakers, and so forth. At the US level, the notion of responsible investment is quite focused still on that notion of financial returns. There is an interesting, I don't know if it's a psychological divide or if it's simply a matter of the depth of maturity of the markets in the respective areas, but you do see that difference represented across a range of different forums, and the GRI versus SASB is a really good example of that. You have the European-focused GRI, which looks at the very broad range of different factors which might be considered material for a company, as opposed to SASB, which also looks at a lot of indicators, quite broad, but it always tries to bring it back to the impact on risk to returns and looking at things from that accounting perspective. That's definitely a dynamic that happens at a global level, and be interesting to see how that plays out. And I would just say at a regional level, I think some of our markets, so for Australia and New Zealand, for instance, the local markets here are quite aligned with the European approach. Markets in Japan could possibly be seen as being aligned more with that US focused approach. So there is that issue of value versus values, and that argument hasn't been quite finished yet.
Thank you for that response, Duncan. One of the issues faced by companies is that there's too much noise. SDGs, TCFD, SBT, which is science-based targets, net zero targets, etc. What advice would you give to companies on how to cut out the noise and start identifying what is material, and not just focus on doing kind of a colorful report for the sake of getting something out there and, I guess, ticking the boxes of all the various standards?
I'd like to say this is a new thing and it can be fixed. I've had companies asking me this question for around about 20 years, right? So I don't think it's reasonable for companies to imagine that there will be a solution at some point where there'll be one set of questions they have to answer and it'll all be solved. The world doesn't work like that. It never has. What you need to do is identify the stakeholders you want to engage with, put appropriate effort into dealing with that, and make sensible judgments about where it's worthwhile spending your money. I have a lot of sympathy for companies who certainly, for instance, in our space, receive information inquiries from 5 or 6 different agencies. It can be very frustrating, and I do sympathise with that. We are seeing initiatives happening in the technology space, such as website markup language and so forth, that is going to make some of the data gathering quite a bit easier. But at the same time, and even if we have perfect data, it's going to be the agencies that are forming conclusions from that data that are going to be wanting to ask you questions. And that has to work both ways. On the one hand, if you want to have ease of communication, you just accept whatever the rating agencies and so forth say about you. But most rating agencies, I find, are quite responsive to inquiries from companies, and companies usually want to have some sense of involvement and ownership in that process. So it works in both directions. I know that's not an entirely encouraging answer, and I apologise for that. Yeah. I think that's the reality of it.
Yeah, and I guess
Anita can probably comment on that. I see Anita smiling and laughing on that one. She can probably give better answers on that than I can.
No, I think you're right. I think it has always been this way. I think it will always be this way. People like me and my colleague Shuling Lim, who heads our sustainability reporting, will feel frustrated that there isn't one questionnaire to rule them all. But it is about, I think, as you said, Duncan, identifying what is most material to your business, what is most important in terms of the impacts on your business and the impacts by your business on others, and then focusing on those things that you can do well, rather than feeling like you have to answer all of the boxes or ticking all of the boxes. And then it's about how do you explain that, right? How do you justify and explain that choice? And I think that's the test when other people believe that something else should be your focus or the focus of your business because it is material to them, then I think that's the real challenge, particularly if you're like we are, a B2B supplier, you know, very much at the coalface of upstream production. You know, sometimes the expectations further towards the end user or end consumer are different than what it looks like when you're at the sort of coalface, for want of a better phrase. But there will never be one single silver bullet questionnaire. It, as you say, the world doesn't work like that. People don't work like that.
Yeah, sadly, I agree. But you know, I think you raised a couple of important points there. One is a robust materiality assessment. It shouldn't just be about coming up with a list at the end, but I think it should provide you with evidence to have that conversation. And in a world with polarized views, explain to people why certain topics are material, why you're focusing on you know, certain issues, and perhaps why you're not prioritizing others. And I think another question that's kind of come in, and I'll direct this one at you, Anita, is around, you know, how do you stay on top of a fast-paced, changing, immediate environment, as well as keep an eye on long-term sustainability? So how do you kind of monitor, I guess, and track what's happening day to day, as well as, you know, assess what's material for the long term? You know, how are you having that conversation, and how are you managing that at Golden Agri?
It's a great question, and it involves layers of activity of both listening and talking. So from a sort of immediate impact day-to-day perspective, it's the kind of media and social media listening and monitoring we do for emerging issues. But that can also give you a sense of themes. It's regular stakeholder engagement, not just with like the NGO community or indeed the financial community, but also the communities in which we operate, our employees and others. So I think there are more mechanisms to enable that engagement to happen on an ongoing basis. It's not so technology and this way that we're able to communicate with each other now, the advent of various applications and web forums and so on enable us to be collecting the voice of stakeholders on a more regular drumbeat basis, but also explaining our choices and priorities to those same stakeholders on a more sort of regular drumbeat basis. Workshops and webinars like this are obviously sources of information, but also a bit of a sense check for what we prioritize. An absolute recent example, this is my third call this morning. I was on with a customer earlier. I was then on with a government minister in Singapore, and now all of you. So those have been interesting conversations in terms of both the expectations from our customer, but also how we then reflect back in terms of our priorities into government and talking about how resource-intensive industries like ours might contribute to sustainability agendas. This all helps to inform then what we take into the materiality assessment and study process and back into our own leadership. But you have to spin a lot of plates at the same time in order to be able to try and pull those things together. I often think that my job is to be able to read trends and to connect dots, to look at puzzle pieces and fix them together into something that's meaningful for our business in terms of what next.
Yeah, no, and I think you're absolutely right there. And for a company that's obviously in a controversial sector, palm oil, but a sector that's so important to get sustainability right, I think engagement and with all the different stakeholders is crucial for you. And I think many companies in perhaps less hot sectors should also take some lessons from that. No, thank you all. We hope you found it valuable. And so I'd like to thank our guest speakers again and close our presentation.